Hi, it's Anthony at Land Title, and I wanted to bring you the Boulder County local insights for August of 2021. We have a lot of really interesting stuff going on in Boulder County right now, and what we're seeing is this resurgence of a strong market in the fall. We had kind of a little bit of a lull in July, which was, probably well needed because there just hasn't been enough inventory, and inventory shrinks going into August. So the biggest takeaway from this is that expect a strong fall market. We have a lot of buyer demand. It looked like things were going to taper off a little bit in July, but they're really not, right? We're going to follow a really traditional seasonality that we usually don't see, or that we usually see, but really, really strong buyer demand, much like last year in the fall, right? People kind of took a break, they traveled, they did some things, but now that kids are back at school, it's been very apparent and very obvious that we're going to start seeing some of those really, multiple offer situations. We're going to start seeing, the shrinking of inventory again, which, oh boy, do we not want that, right? A couple of years ago, we saw these nice, pretty curves, right? This was pre-COVID, and then last year everything was all messed up. But we had this huge buyer demand surge after about May, right? And when that demand surge took place, we've really never recovered because interest rates have stayed so low, and people are getting these huge levels of appreciation. And what that's creating is a very long-term cost of living increase for the Boulder County area. And you can see here, if we look towards our active listings, you can really just see how that is all affected where we sit today. So we're still under 500 units of inventory. We were barely starting to creep up above that last month. But the biggest takeaway here is that almost half of the inventory that's active in the market in Boulder County is actually in the city of Boulder. And a lot of that is due to price point, and a lot of that is due to just the dynamic differences between the city and the county. So with that being said, the inventory shortage is very real in the majority of these cities, right? Pretty much everywhere out there in the county has having a huge problem with their inventory. Look at these active unit numbers. It's double digits in most cases. The fact that Longmont only has 109, it's a much larger area, and that's really a problem. When you look down in here into the trailing 12-month data, and you can really see over the last year how much has really shrunk, you can see that those outerlying cities have really been hit harder than anywhere else. So Erie, Longmont, Louisville, Niwot. You can see in Superior and Lafayette, they've taken a 50% reduction in inventory, but those other places are really, really struggling maintaining those active inventory levels because there's so much buyer demand out in the county. Now, if we look to our next slide, we can talk about month supply of inventory. And month supply of inventory, a balanced market would be that 4 to 6 month range, and we are still back under a month, right? We haven't been over a month for the whole county, all year, right? And it's hard to say if we will get there at all, right? We're going to be bouncing around at these low inventory levels for a while. Now they can get more extreme, right? Places like Denver or places like Colorado Springs or Northern Colorado are much more extreme than Boulder County. And the reason for that is the price point in Boulder County is really, really high. So your barriers to entry are very different. You still have a large buyer pool, but not as big as somewhere like in the metro area where you have cheaper housing, and that can drive the supply of inventory even lower. So what you're seeing here is you're seeing pretty much across all price ranges or across all cities, I guess, within the county, that inventory level is really, really low, right? There's a couple of places where you're getting a little bit more than a month, but not much. Either way, it doesn't matter where you're at in the county, it's still a very, very strong seller's market. And it's a great time to take advantage of that as a seller, especially where not enough inventory comes on the market in the fall time. You're still going to be able to reap those benefits of this really, really amazing market right now. So if we go over to the days in market, days on market tells us from active to sold. So when we're looking at this 37.5 days from active to sold, really tells us just how much buyer demand is in the marketplace and how fast properties are moving. So coupled with the super low inventory, properties are moving at record pace because of that. So basically you've got a weekend of negotiations, and a 30-day contract is kind of where we're settling. Obviously those timelines change based on price point and all kinds of other stuff, but we're seeing a little bit more of a traditional market this year where we usually have higher days on market in January, and then they shrink down into the June, July timeframe, and then they kind of creep back up. So expect these to continue to rise for the rest of the year. That's a kind of a good anticipation going into the fall market, but they're going to stay low. It's very possible that they stay somewhere, that they stay somewhere around where we were in 2020, where you're more of a plateau in the end of the year because of the buyer demand, right? There's just a lot of demand from now till about November, probably. If we see that into the fall market, don't be surprised, but they probably won't stay at, in the 30s, right? If we were around 40 or more, that's a little bit more healthy, right? It's very difficult for buyers to get under contract with days on market like this. I mean, you're really having to go out and look the day stuff comes on the market or that opening weekend, get into a bidding situation, see what happens. And the data really supports that that's what's happening. So if we go over to our by price range section, so you can really see luxury in our sales has been doing incredibly well all year, right? 350% year to date, more than last year. Granted, COVID really threw things off, but 72 homes over 3 million is astronomically well for the county of Boulder. We've never seen anything like that. Now you can even see down into the 1 to 1.5 million, it's 50% increase in sales. The 1.5 to 2 million, 77% increase in sales, right? These are really, really large numbers taking place in sales in the higher end of the market. Now, the real problem is what we're experiencing is these huge reductions in active units in the lower end of the market. So if you get into that, 800,000 and under branch, we are really going to be down in sales. Now you can see that this is about where it's kind of even, but the problem is that we were short on sales in the first half of last year. So being up only 3% really indicates that we're going to suffer the rest of the year with not enough inventory. And that's going to reduce the number of sales that can take place because of that, because even though you have lots and lots of demand, we're limited to just what comes on the market that can sell. So you can see it gets more and more extreme as the price gets lower and lower because there's just not enough of that product out there in the market. Now, if we look at month supply and days on market for those price ranges, it really kind of articulates that scenario. Keep in mind, this is not that bad. It can get a lot worse. Like it can get a lot less inventory on the market like we saw in the spring or like we see in other markets, like I was saying. So the biggest takeaway, I think, from the month supply of inventory is the 3+ million market and even the 2.5 million to 3 million market. This is more of a balanced market than I've seen the entire time I've been in Boulder. Usually we're sitting at, double-digit month supply of inventory for that 3 million market. There is a lot of activity in the luxury market, right? Don't let these fool you. These numbers are all still very seller side heavy, except for that 3 million market, right? These are more balanced, but you get down here into under 1 million, and now we're back at that ultra low, highly competitive market that needs to be, handled quickly and very, very, professionally to make things get under contract. You can see here on the average days on market, you're under 800,000 and it's just really, really competitive. Those luxury price points though, don't be surprised if they sit on the market for a month or two or more to get sold because we have a lot of inventory there. But the thing is, if they're priced right, if they're moving ready, they are selling ultra fast. And you can see that in that 2.5 to 3 million market, it's moving just really, really, really quickly. These are a lot higher than they have been in the last month. You can see kind of our month over month data, they bounce around quite a bit, but this is a very, very strong seller's market, lots and lots of buyer activity that's kind of shown here amongst all price ranges. When you see a number like this is a house that might have been sitting on the market for 1,000 days that sold. They really skewed the numbers because we only had 8 sales in that price range. So that's why you see a lot of bouncing around at those higher price points. Now let's move over to the sold analysis. So this is the number of sales taking place in the market. We're getting back to a more normalized seasonal curve that we experience in Boulder County. We're really kind of at the mercy of listings coming on the market. So if there are more listings that come on in the fall, you would see this rise up, but most likely you're going to see something similar to 2019 where not as many sales in January, they rise to the spring, and they slowly kind of fade away until January or till December. So expect a lot of sales to take place, but less every month from here to the end of the year, kind of on average, right? Now, if we move over to our average sold price is going to bounce around a little bit, right? We've been heavily, heavily weighted into the luxury market in Boulder County. That's giving us some of these really high appreciation numbers. But if you're looking for, year over year appreciation looks like 12%. This number is a better indicator, this trailing 12-month change. And you can see by city, some of these cities have done really, really well. And places like Niwot, there's not enough data points to give you an accurate representation. Right? Average sales price of 1.5 million looks like it's the the highest in the county. But over the last 12 months, we're talking 800,000, right? And the previous 12 months, we had a little bit more luxury sell. It's just a small market. So we really need to look at those and analyze them a little more specifically. But you can see some true market appreciation in a lot of these markets. Superior has had a changing population of new development coming on, and that's increasing those price points as well. So some of this is that added luxury, and some of it is just pure high buyer demand with not enough sales, and it's driving those prices up. We go over to this one. This is the sold units. This is a good one to kind of gauge where we are this year versus last year. You can see that we're ahead by about 4.5% in total sales, but we're probably going to miss that mark by the end of the year because it'll be really difficult to put up the sales numbers we saw at the end of the year last year, right? We missed a couple of months because of the shutdown, and now we've been making up for it. But buyer demand is still soaring. We're just really short on inventory, and with not enough inventory, we have stifled sales across the county. You can see at all the different cities kind of what's happening and where they're happening. What you can see is places that had inventory like Boulder have really done well. Lafayette, they've done great. But in places like Erie or Louisville, where there hasn't been enough inventory or Longmont on the market, without that inventory available, they just aren't going to get the solds that they need, or that would the demand would indicate we should have. Now, if we swing over to the percentage sold price to list price, this is kind of that factor everyone's talking about. Denver is much more extreme than Boulder County, so keep that in mind. If you look into the Springs or into northern Colorado, we're actually kind of coming back down to a more normalized market much faster than a lot of those markets. But what you can see is in those price ranges that the majority of the business is happening, they're still highly competitive. You're still getting bidding wars. You're still getting over asking price offers. Look at this, 1 to 1.5 million at 102.5%, right? Definitely really strong sellers market numbers. And you can even see just that some of them are coming back quicker than others. Now, this was a once in a lifetime type of market, right? Without inventory and with really low interest rates and high buyer demand, you get these kind of 106% appreciation numbers in a month. But that percentage sold price to list price is coming back much more to a normal market. Expect that to settle even more as we get towards the end of the year. It might flatten out here for a while because around 100%, you're probably going to see that in the fall market, but we should see something similar to the bell curve like this. Just this one has been much more extreme because of the market conditions. If you look in attached, the attached market is very similar. We saw this huge rise into the spring market where it got very competitive, and it slowly trickled down. So expect that to also settle towards the end of the year. If you have any other questions, or if I can help in any way, this is Anthony with Land Title, and I hope to catch you next month.